Hello and welcome to today's Payments Journal webinar, Winning the Battle for Bill Pay. The goal of today's discussion is to share insights from a pair of comprehensive nationwide studies that BillGO commissioned in 2020 and 2021, designed to pinpoint what consumers want in bill pay technology. The study, along with today's discussion, will be made available to our webinar audience. There will be an email following registration that enables access to the ebook document itself that has all the data that we're sharing today, along with sort of written overview, as well as this recording itself. We're joined today by Daniel Hawtof, SVP of Bill Pay Product at BillGO, as well as Mercator Advisory Group's own Debit and Alternative Products Analyst, Sarah Grotta. Without further ado, Dan, would you like to kick us off with an overview of the bill pay space?
Absolutely, Ryan. Thanks. As we know, nobody wakes up in the morning and says, oh boy, I get to pay bills. The best bill is no bill at all. But if you have to pay a bill, you want it to be clear, fast, and easy to pay, as well as get a confirmation that you paid it so you know and can relax about your bills.
So Dan, talk to us about payment as an anxiety pain point for consumers.
Ryan, consumers still have anxiety about bill payments. They need to know that they're going to get to the biller on time. And as I mentioned, they want a confirmation to know that that bill has been either paid or scheduled. They know that if they don't pay their bills on time, there could be fees or credit score impacts that they really don't want to have happen to them. And a fun fact, according to FICO, if a person misses a single bill, it can trigger as much as a 180-point drop in their credit score, meaning someone who has pretty good credit, if they miss one bill, they can end up labeled as someone kind of very poor or not a good credit risk. And consumers know this and really want to avoid missing out and not making a payment on time. Banks and fintechs are trying to help their customers make these payments, but they need to be innovative and really deliver the kind of experience consumers expect.
Yeah, I think what's interesting about this is that financial institutions, particularly those that are a bill payer's primary financial institution, I think really are in the best position to help the users with these issues around bill payment anxiety, right? They're seeing the majority of a user's financial activity, and they are likely also holding a majority of their balances. And so I think, part of the anxiety for bill payers today is it's really a sort of a disjointed experience. I might be, paying these bills across all sorts of different biller sites, and that doesn't give me a good view of where I need to be. So I think if we can consolidate that, within the financial institution view, I think there's a lot of opportunities. And I think about sort of that nirvana scenario where a financial institution has a really modern bill pay solution, and they're able to kind of forecast that consumer's cash flow, based upon other activity that's going on in the account, kind of like we do for business accounts, and really help to alert the consumer when they might run into issues, when they might run into that cash flow issue, and be at risk of making a late bill payment. And I think if we can come to those kinds of solutions, we're really gonna pull down that anxiety level.
So Dan, we covered late payment anxiety and how financial institutions need to meet the needs of digital savvy consumers. How about bill pay adoption?
Well, Sarah gave a great lead into this. Years ago, banks were the primary place that consumers went to pay their bills. However, for many years, they were losing that bill pay share to billers directly. However, over the last year or so, we've seen them regaining share as they pay more attention to bill pay and they get more focused on delivering that kind of experience. And now we see about half of consumers use their bank to pay some of their bills online. That being said, there's still about 2/3 who go directly to their billers to pay their bills. So that nirvana that Sarah was talking about, where they can go to one place and see everything and manage all of their money, we're not there yet. The consumers are still all over having to manage and log into many places, oftentimes, creating spreadsheets and whatnot in order to consolidate and forecast their bills. According to our research, that consolidation is something that users really want. And again, there's a great opportunity for banks to work with innovative companies to bring all of that information together and deliver the tools that Sarah alluded to as well, that we're going to dig into on the next slide, that consumers want in order to really adopt bill pay.
Yeah, and I think this is one of those areas that we find in payments modernization where I think a lot of financial institutions really don't want to go it alone. Building a modern bill pay solution is tricky, and it requires a lot of flexibility. I think about some of the things that bill pay platforms are having to do today just to add, say, for an example, a new payment rail, right? We have new payment rails coming online. Consumers want to use those to pay their bills. The opportunity to have a real-time solution available is great, but that's really, I think, best handled by technology providers who are really focused on that and focused on all the downstream activities that need to occur when you're bringing new technology into the space. So I think some of the most modern bill pay experiences I've witnessed in the marketplace today are ones where financial institutions are partnering in the industry.
Today we talked about bill pay adoption, the need to fast track development. What are some of the incentives that consumers have to switch to their bill pay methods?
Well, we know consumers are pretty savvy. If you build it, they won't come necessarily. There has to be a good reason for that consumer to adopt and maintain. They will try things, but will drop them very quickly if they don't get the kind of incentives that they want in order to stick with something. About half of consumers have said in our research that they want a better bill pay experience from their financial institution in order to move to that experience. And the incentives that they're looking for could be financial. So we do see some banks offer a financial benefit to move, but the consumer's a lot more clever than that. What they want are a number of features and advantages that really help their day-to-day bill pay experience in order to move. They want real benefit. Those kind of benefits include things like scheduling tools, real-time payment abilities like Sarah mentioned, the ability to get a rapid payment confirmation so they know as soon as they make the payment or it's scheduled that they know that they're rock solid and everything's going to happen the way they want. And they want the ability and flexibility to pay what they want, when they want, how they want, and blend all of the different things together to manage their cash flow and financial health all together in this experience. So it's not an easy task, but it's definitely available in market, and consumers, when they see it, will adopt it and stick with it.
Yeah, that's interesting because, as we saw that sea change of consumers leaving bank bill pay over the years, now we've built the better mousetrap trying to get them to change habits. I think is going to be a little bit trickier, but are you starting to see financial institutions really promoting their bill pay for the first time in 20 plus years?
I think we're starting to see them offer a lot of the features and functionality that allow them to compete with a direct biller relationship. So they're building all of that, and as they build it and gain confidence that it's all working exactly the way they want and the experience is actually better, then they start marketing it.
So Dan, we just covered consumer incentives and not necessarily financial incentives, but as you say, a better experience and features and advantages. Talk to me a little bit about consumer interest in microloans.
Sure, Ryan. One of the things that we see in the research is, we don't even have to look in the research to see that many consumers over the last couple of years have had a tough time, right? There's been loss of employment, reduced income. Today, we're seeing a potential downturn in the economy, plus record high inflation. So there's a lot of pressure on bill payers to be able to make ends meet. We asked them about microloans, and they said about 20% said they'd be very interested in getting a microloan to help them bridge the gap between payday and bill due dates. Historically, and in the news we've seen for many years, payday loans have filled that gap. But payday loans often charge an exorbitant interest rate, have fees, and can sometimes be predatory, making it so that those consumers, once they go get a payday loan, they have a really hard time getting out of it and paying it off. Banks, as a really trusted, have a trusted relationship with their consumers and could offer microloans to support their consumers during these tough times at very reasonable rates. And I think that's a good opportunity for banks to really position themselves to not only support the actions of their customers, but really help them with their financial welfare and help us during tough times.
Yeah, I think this is such a topical subject, not just because of our current economic situation, but also because of the scrutiny that overdraft and NSF are receiving right now. So, financial institutions are trying to figure out, how is it that we can help our consumers, but at the same time, we need to figure out, some way to stay away from really heavy overdraft fees as well. Some people almost want to equate the overdraft fees, at least the high ones, with the payday loans that you discussed. So I think having a micro loan service sort of interwoven with the bill pay solution is it just makes a ton of sense. Do you have any advice about, how do we tie these two things together? How are financial institutions figuring out that, the consumer needs to pay their bill, they're going to come up short, now is the right time to offer a microloan?
In some of our experiences, we have, we'll project a user's or a consumer's income for the month. They'll enter, I make X amount every 2 weeks, and we'll then sum up the bills that are due, and there could be a gap. So if they go through and look at the minimum amounts due, they may find, one, that the microloan offers a better interest rate than, say, their credit card company, but you can see that gap in the amount of money coming in and the amount that's due, and a microloan could be offered when that gap is there.
It sounds like the microloan is a fantastic advantage for consumers. One of the features that caught my eye was subscription management, considering the boom in the number of subscriptions we've all picked up recently. You're
right. We've seen subscriptions grow in popularity significantly over the last few years. With us all staying home with COVID and lockdowns and whatnot, people signed up for a huge number of subscriptions. I did see a statistic that during May of 2020, subscriptions jumped by 85% across industries. So there was just this giant move to subscribe and get things delivered to home. The kinds of subscriptions that we see are obviously the usual suspects of media, like Hulu and Netflix, but also shopping. Everybody signed up for Amazon Prime so they could shop and get everything delivered to their house. And then they signed up for food from companies like Daily Harvest or Freshly, and even wine. Frankly, I needed the wine and alcohol during that period. And there are a number of companies that offer subscriptions that'll deliver wine and booze directly to your house. So that combination of subscriptions, while not a huge percentage of most customers' bill amount, represents a lot of bills. So they end up with a lot of small bills, $9.95 or $20 a month or something like that they have to manage on a regular basis. And the challenge of managing subscriptions is really, most of them will only accept a credit card or debit card. And once you've signed up and put your credit card on file, if something changes or you want to use a different card or you have to update a card because, let's say, the expiration date changed on your credit card, first you have to figure out, what did I subscribe to? What are all my subscriptions? So that I can go change that credit card. And then you have to log into each one of those and make a change. Let's say you buy something on one credit card and you're not going to have enough money to pay, you run out of credit on that card and you want to put a different card on. Again, managing all these little subscriptions that add up can really be a pain. So there are solutions out there that help you in that consolidated way. Look in one location, change the card, and then push that card out to all the different subscriptions that you have.
Yeah, I think, the ability to make consumers aware of just all the places that they've put their payment credentials for a card on file scenario is really important. Not only to make sure that it's up to date, but I think there's also a fraud mitigation aspect to this as well, right? So you've got services maybe that you haven't used in a long time, you've turned off the service, but your card's still out there, right? And it's still vulnerable in that environment potentially. So that's a good reminder for consumers as well. In the solutions that you're talking about, not only are consumers made aware of these places, but you're actually going to do the updating so they don't have to log in on every site and make those updates. So you have the connectivity with the biller, the subscription provider to make that update automatically.
Exactly. Yeah, we have credentials to be able to go in and update the credit card on behalf of a consumer once they've given permission to do so. You can say, I want to change my HBO, my Netflix, and my wine.com subscription to this new card, or this update the card, and just push it out there. So it's really handy, and it's just emerging as a feature, so it's brand new. But we see a lot of interest in that sort of functionality to help consumers manage what they're paying and how they're paying it.
Really cool. Sarah, I've pulled up some Mercator Advisory Group data sort of regarding the importance of payment choice or consumer preferences. I'm curious if you wouldn't mind unpacking this chart for us and talking to us a little bit about it.
Yeah, so the data that we have on this particular slide comes from a survey that Mercator conducted with a little over 3,000 consumers here in the US. And we do this on an annual basis. We're just trying to keep a pulse on what's happening in the bill pay marketplace. But consumers are telling us that payment choice is really important to them when it comes to paying their bills. And that's not necessarily something that they might be getting at a financial institution solution. So we find, not only are consumers interested in having the ability to have bill pay automatically deducted from their checking account, but they also want the flexibility to use a debit card or a credit card. And, every once in a while, somebody likes to write a check even. I'm not sure if they're trying to play the float, but, again, that's what consumers are looking for is really having that flexibility to manage those payments on their terms with the payment product that meets their need at that particular instance when they need to make that kind of payment. So again, that's what we have here on this slide is really the preference that consumers say that they like when making those bill payment activities.
Sarah, one of the things that we see, you did a great job of talking about type of payment, different ways people want to pay. One of the things we continue to get asked about is provider. So it says credit card, but a lot of consumers will go to a financial institution. That financial institution may let you pay with their credit card, but consumers need that even greater flexibility. They may need to bring another credit card to pay bills. And you don't want them to leave your bill pay experience because they want to bring a credit card that isn't issued from that particular financial institution or even a checking account that doesn't come from them. So if you really want to capture that consumer, you not only have to offer choice of type, but choice of provider across that type. And then you really are helping that consumer pay any way they want.
Yeah, I agree. And look, I appreciate what financial institutions are trying to do, right? They're trying to maximize their opportunity by trying to keep the payment transaction within their four walls, if you will. But at the same time, that's not necessarily what consumers are looking for. And I think there's a lot of opportunity to attract consumers to your financial institution because of the bill pay solution. We know that bill pay consumers tend to have more products with their financial institution, and they also tend to stay with that financial institution for a longer period of time because of that service, if it's a really good service.
Sarah, talk to us about the importance of speed.
Yeah, so this is becoming, I think, more and more important, right? Because with the advent of real-time and faster payments, consumers are now expecting more of their payments to be instant or at least happen within the same day. And so here we see on the slide that actually, over 30% of consumers think that when they pay a bill, it should be instant. And I should say here that it's instant in their eyes. It may not necessarily be going through an instant payment rail, but it has to be instant to the consumer. And they need to get an assurance that, they've paid their bill and they've paid their obligation at the moment that they conduct that particular transaction. And so what's also interesting, I think, is that if we look at this data from 2 years ago, it was very different, right? Many fewer consumers really felt that instant payments were as necessary. But with the advent of things like P2P transactions that are conducted instantly, it's now becoming an expectation.
We also see that speed is one of the most important draws for financial institutions to implement a new bill pay solution. Consumers obviously want to pay at the last moment. That can be not only for just flexibility, but they may not get the money into their account from their job until the last minute. So they want to be able to get the money and immediately pay bills based on the money that comes in. And we see one of the main reasons that consumers go directly to a biller's website is that instant pay as far as they see it, not necessarily where the money moves, like you said, but they say they get credit for making that payment the moment they hit pay. And a lot of financial institutions historically were next day pay. In order to really compete with that biller direct model, they need to offer same day or close to real-time payment in order to draw those the consumers away from paying directly with their biller.
Sarah, do you want to talk to us a little bit about the specifics, the ins and outs of credit and debit cards and consumer preference?
Yeah, absolutely. I've got just this last data slide here, and it is a bit of an eye chart. Sorry about that, but it's got some interesting information here. As we discussed, of course, payment choice is really important. But payment choice does in fact mean different things to different individuals. It really speaks to the need to offer a whole variety of payment options to consumers. So we ask consumers who have a preference for debit cards or credit cards or even cash, what they found to be best about their preferred payment type. And I think there's a couple of really interesting standout pieces of data in this particular slide. And if you take a look at those who prefer to use debit cards to pay their bills, they say that they're making that selection because to them it's absolutely hands down the most convenient payment type for them. So they really value that convenience. Now take a look at what credit card preferring consumers say about paying bills with a credit card. Really what those folks are after, I guess it should be no surprise, they're after the rewards points. And that's why they choose that particular payment type. So we're just on this slide, interesting data, just really kind of double down on that topic of payment choice.
Sarah, I agree that choice and the fact that people use cards is very convenient. I think they also appreciate the security of paying with a card. It's ranked number 3 here, so it's clearly an important element, and we try to leverage cards a lot because most consumers are more comfortable knowing that their bank will back them up if that card is stolen. If someone gets your checking account number and takes the money out of your checking account, it's a tougher discussion than one of those where there's somebody charged some gas on your credit card. So that security is a big advantage as well. And we see a lot of people who are shopping and buying, especially as they start shopping internationally, they really love the security of using a card.
Sarah and Dan, thank you so much for sharing your expertise today. I feel like we had a really data-rich presentation, covered everything from changing consumer expectations, new product offerings like microloans and subscription management, payment preference, speed of payment, and sort of like everything in between. Thank you again for your time. I want to remind our audience that the ebook, BillGO's ebook, Winning the Battle for Bill Pay, is going to be made available. We'll send that along with the video recording of today's discussion.